There is one very consistent trend that has been very loud in the media, lots of stimulus measures, we know that, but there's an underlying almost silent trend, jobs going away and never coming back. We're always told that the middle class will be better off next year, next 5 years, 10 years, and so on, but the trend has been dominated by an evaporation of the middle class. Real wages are declining, stimulus cannot fill the gap. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening specifically with Foxconn. I want to show you here, there's a couple articles that I need to get into. We're going to talk about the taxes that these corporations pay, how they get away with all of this while the middle class has these very high taxes that are unfortunately strangling them, pushing them down. And you see as time goes on, despite the fact that interest rates have been declining here for decades, people are worse off. All right, then we're going to look at what's happening with some economic factors. I've got a lot of details, articles, charts, the whole deal. Let's get into it right away. Exclusive. Wisconsin report confirms Foxconn's so-called LCD factory isn't real. Now, what do they mean by not real? Check out the subtitle, and in fact, you could read the entire article if you're interested. The building may be better suited for demonstration purposes rather than as a viable commercial glass fabrication facility. So it's not as if it's completely fictional. It's not as if it was just something on a piece of paper or on a computer screen, but basically it doesn't operate. It doesn't function. There's no jobs. And that's the whole point. It's the jobs. The jobs are the absolute most critical factor because they need high paying or middle class, strong middle class jobs in order to make the economy work. You can't have stimulus that somehow provides everything that the economy needs. It doesn't work like that. You need jobs. And they always talk about this. You hear it every so often, but ultimately it doesn't mean anything because the jobs keep going overseas, and that's the way it is. You can't have Silicon Valley that's generating all of this. You can't have a stock market that's generating everything. No, you just need good, strong middle class jobs. And unfortunately, you look at the details, you look at the data itself, they're going away. I found another article associated with that report, and I wanted to bring out some details here. Almost from the start, there have been red flags surrounding the Foxconn project. The town of Mount Pleasant, Wisconsin used eminent domain to seize productive farmland for the now defunct LCD factory project. In fact, if you look at the picture on the previous article, you will see there's all farmland around. Then this gets even deeper. Walker struck the $3 billion subsidy agreement without going through official government channels, and Foxconn has a long history of failing to live up to job creation promises connected to public giveaways. So here we have an unfortunate situation where the taxpayers bail them out. This company is obviously benefiting from it, and yet there's no jobs. So you can understand, you give subsidies to these particular corporations or industries. They do it in all industries, in fact, but there are reasons for this. They're going to bring more jobs in, they're going to boost up the economy. They're going to do these things for a reason, but unfortunately for so many and in so many cases over the years, it does not happen. There's more to it here. If you want, definitely check out the link in the description. I will leave it there for you, but I'm going to show you something else. There's a very detailed article here out of the Washington Post that's talking about corporations and paying taxes, or lack thereof. Check this out. It is striking how little U.S. corporations pay in taxes. Based on public reporting, we calculate that in 2019, nearly 20% of large corporations that reported profits to shareholders of 100 million or more paid zero or even negative federal income taxes. I want to take a little vote from everybody right now. Do you pay negative federal income taxes while generating revenue of millions or perhaps billions of dollars? Probably not, but that's the way it works when you're able to use the loopholes like the big boys do. Some non-payment of taxes reflects corporations that make extensive use of tax benefits directed at spurring investment or research and development. But there are valid concerns about companies' tactics to avoid bearing their fair tax burden, including domestic tax sheltering, international profit shifting, and deceptive accounting around activities such as leasing and debt forgiveness. There's so much more in here. Obviously, I'm not going to be able to get into it all, but I think it's interesting that you as an individual, you got to stay on the straight and the steady. You got to make sure that everything is all good. Stay within those lines, what I'm trying to say. But these corporations, they've got whole teams of people that know how to move and manipulate. And unfortunately for the average person, they are getting screwed over. That's just the way it is. We can see the details of how bad things are, not just for the United States. I like to cover information from all over the world when I can get it. This is about Europe. It's an article out of Bloomberg. Half of Europe's smaller businesses risk bankruptcy within a year. Over half of Europe's small and medium-sized businesses say that they face bankruptcy in the next year if revenues do not pick up. 1 in 5 companies in Italy and France anticipate filing for insolvency within 6 months. This is very big news. This is really important because when I look at this, you have to understand that we have yet to see the worst of this crisis. We have yet to see anything. What you saw earlier in March was just a warning flag. That was just smoke signals. That's just basically the tip of the iceberg. Here we are today, and you can look forward into the future and kind of make estimations as to where we are headed. Now, there is a chart here. You could see about 4 in 5 European SMEs think the economy is weak. Depending on the country here, it's going France, Germany, Italy, Spain, UK, and it breaks it down in how they feel. But ultimately, there is weakness all across Europe right now today. And on the complete other end of the spectrum, we have this. I've been covering this issue here. While you see some people who literally cannot afford to eat, you've got the food bank lineups going down the street. You've got people going in the Hamptons, for instance, here, other places. They're buying up real estate like crazy. The private islands are so busy right now for all of these agents that are trying to get people in, trying to look for islands somewhere, trying to look for high-priced, expensive real estate. This is one. Rich New Yorkers flee to the Hamptons, sparking $1 billion real estate boom. It just shows you how there is a great divide in between the rich and the poor. This information is from Bank of America, Fiscal and Monetary Policy Tracker. You can look at all of the different countries. The font is too small probably to see on your screen, but I have to show it all at once, and you could see in the description if you want to check it out. It just gives you an idea of the central bank actions as well as the fiscal stimulus that have been provided. And to me, it's extreme. Take a look at Canada, for instance, on here, which is shocking, the numbers. When you look at the percentage of the GDP that they have gone into, they are going far above and beyond. Yes, you have to measure the amount of stimulus compared to the GDP, and that gives you an idea, because the dollar value isn't necessarily the best thing to look at because it depends on the size of the economy. Canada's one that went way overboard. So we're going to see the effects of that. Was that a good idea? And is that the end of it? We might see more stimulus coming out 2020, maybe 2021. How is that going to affect them in the following years? Speaking of stimulus, quickly, global liquidity proxy, you can see the amount of money that's been pumped into the system. It is showing us right now $92 trillion, where this has basically just gone haywire since March timeframe. You know exactly what's been going on. I actually have the information directly, which I'll show you in just a second, but directly from the IMF, where we've had $12 trillion in stimulus from the government, $7.5 trillion from the central banks, and that gives us nearly $20 trillion of a flood of money in a span of months. Different places around the world have allowed people, businesses, and so on to essentially not pay their rents, not pay their debt, whatever it might be. In this case here, we're talking about the mortgages, and this is referring to Canada specifically, but I know that this applies to many different countries. 3 of Canada's 6 biggest banks said that they expect most borrowers who took advantage of the deferral programs, just check this out, they will resume their payments. Okay, this basically is countering their fears of a sharp increase in impaired loans. Specifically at the bottom, we are not looking at seeing a big spike in foreclosures. We expect that these mortgages, as they come off the deferral programs, to remain the homes of our clients. There are a lot of details here, but essentially what they're saying is, yes, people are taking advantage of not paying back their debt today, but as soon as we tell them to pay, they are going to pay. We'll actually see what the reality is in due time, but they continuously have to push this further back. So what does that tell you? That there is a problem there, and you can only fill the gap for so long. These corporations their losses are going to look just ridiculous, but it's sort of acceptable now. And that's the way that things have been really over this period of time. All we do is we lower the bar. So this is where the bar was. And yes, that's great if they can beat that, the earnings reports and all this nonsense. But we just bring the bar down as far down as we can go. Let's say this is the ground here. So we just put the bar right on the floor, and it's no problem. You could just hop right on over that and there's no issue. This is the ridiculousness of the world that we live in today, where they can manipulate everything as long as it looks good on the surface level. You don't need to worry. The IMF is concerned that social unrest will make a comeback in lots of countries across Latin America. This is, of course, an issue because you've got all these stimulus measures being put in place today, but what happens when they run out? What happens when they turn off the taps? They do get into more detail here, of course. I just wanted to show you this very quickly, just to highlight the fact that the problems we have today are all around the world. This was sent to me by a subscriber, and essentially it's called a new Bretton Woods moment, and it's directly from the IMF. I got almost to the end of it. I was bored out of my mind, but essentially the actual useful information here was what I brought to you earlier about the amount of stimulus that was put into this. And it's $20 trillion that have been put in it just a matter of a few months. To me, that is so extreme. It is mind-boggling to see how much they can do and yet call for more, at the same time suggesting that this will have no negative impact. If that's the case, I pose this question all the time. If this has no negative impact, why not just constantly do it? Why not double that? Why not multiply it by 10, by 100? It never has any negative impact according to these people, so why not? That's a legitimate question I'm asking today. Walmart's new store design proves browsing is dead. The reason I bring this up essentially is that we have had some major changes with the way that people do their shopping, obviously here in 2020. And these stores, these big stores that are paying a lot of money to operate them, are having to change, having to basically make sure that they remain relevant. So think about that. Think about the jobs that are associated with it and the changes that could be seen over the next few years. What does that mean for certain businesses? What does that mean for certain stocks? What does that mean for the economy as a whole? And some interesting news to finish off this video. Santa Claus won't be coming to Macys Herald Square this year. Apparently, it's something like 120 or 160-year-old tradition that is not happening this year. And it just makes you think of how anything is possible to change. So that's why when people get stuck in this way, this thought process, they got the blinders on, things can change. That's all I'm mentioning here. I'm gonna finish the video just trying to get you to think outside the box. If you found this video informative, hit that thumbs up button. When you do, you are supporting me. I wanna thank you for that. If you want to learn how to sell stuff online, you are interested in e-commerce, I have a free e-course for you, the AmazonGPS.com. If you want to know the details, the ins and outs of the financial system, but you want it explained very easily, these two books have what you need. You can get them at the link in the description. You can actually flip through the pages of the books for yourself there. If you are more interested in the audiobook version, you can get that at themoneygps.com. Hang on a second, don't go anywhere. Have you seen this video yet? If not, you definitely want to check it out. Click it, I'll see you there.